Wow, look at this! This is amazing! Time to celebrate!
You just got paid. For one glorious second, the number on the screen looks possible. $478.23. Not rich, but breathing. You could actually grab groceries without calculating per ounce. Maybe even fill the tank halfway. You feel that tiny lift in your chest. The world hasn't won today. And then your phone buzzes. A notification. Overdraft fee, $36. Wait, what? You check your other account, the one linked to your debit card. Negative $22. You forgot the $9.99 streaming service that auto-billed at midnight. Just like that, your win evaporates. The system didn't just take your money, it charged you a penalty for almost escaping. Hitting that number felt like a finish line, but the catch is, the rules change the second you get close. Most people don't lose their money because they're reckless. They lose it because being broke comes with a hidden subscription fee, and it costs about $3 grand a year. Let's call it the poverty premium. It's not a single fee, it's a death by 1,000 paper cuts. You pay $8 to cash your paycheck because you can't wait 2 days for a bank transfer. You buy single rolls of toilet paper at the corner store for $1.49 instead of the 12-pack at Costco for 19 cents a roll. Your car insurance is $75 more a month because you don't have a credit history. You take the payday loan at 400% APR because the $400 car repair can't wait until Friday. And when you finally scrape together $500 for an emergency fund, the bank hits you with 3 overdraft fees in one afternoon because a $3 coffee and a $29 gym charge post out of order. It's like running a marathon where the finish line keeps moving backward every time you get within sight. And you're not broken for falling for this. That's almost everyone right now. The system isn't broken either. It's working exactly as designed. Tuned so most people never wander too far from the fee zone. My name is Ted Yellow, and I'm obsessed with how money actually works, especially the parts nobody puts in the brochure. Quick disclaimer, this is education and entertainment only, not financial advice. I'm not a certified advisor, accountant, or your rich uncle. Talk to a professional before making moves with your actual cash. So why does this cycle feel impossible to break? Because Phase 1 and Phase 2 play by totally different rules. Phase 1 is survival mode. You're juggling bills, living paycheck to paycheck, making decisions based on what hurts least today. Your brain is in scarcity mode. It literally narrows your focus to immediate threats. That's not a character flaw, it's neuroscience. Then you hit Phase 2. You get a tiny buffer, maybe a tax refund, a side hustle payout. For 48 hours, you feel human again. And that's when the traps activate. Banks push convenience features that cost $12.99 a month.
This bulk deal is
Apps nudge you
genius!
to treat yourself because you deserve it. Credit card offers flood your mailbox with 0% APR for 12 months, followed by 29.99% forever. The system knows scarcity creates desperation, and desperation creates profit. That $50 you splurge on after a lean month, it's not weakness, it's the relief valve the machine built in. You're not failing Phase 2, you're being farmed. Let's talk numbers. The average American with a checking account pays $144 a year in overdraft fees alone. People living paycheck to paycheck pay nearly triple that. Check cashing fees? If you cash 2 $800 paychecks a month at 2.5%, that's $480 a year gone. Higher insurance premiums for thin or no credit? Studies show it adds $600 to $900 annually. Payday loan interest on just one $300 emergency? Easily $150 in 2 weeks, which annualizes to, well, let's not vomit on camera. Add in the poverty tax on groceries, no bulk buying, transportation, no car, expensive Ubers, and late fees from timing mismatches, and yeah, we're solidly in the $2,800 to $3,500 range. The Fed's own survey found 40% of Americans can't cover a $400 emergency without borrowing or selling something. Not because they're bad with money, because the math is rigged against them from the start. Meet Alex and Jordan. Both made $42,000 last year. Both got a $1,200 tax refund in February. Alex felt that surge of freedom, bought new headphones, took friends to dinner, covered a late utility bill. By April, back to overdraft fees and payday loans. That refund didn't build anything, it just delayed the pain. Jordan did something boring, moved $500 to a separate savings account labeled Do Not Touch Overdraft Shield, left the rest in checking. When a $65 dentist bill hit unexpectedly, no panic, no fees. That $500 buffered the shock. Over the next year, Jordan avoided $317 in overdraft fees, skipped 2 payday loans, $220 in interest, and finally built enough credit to drop their car insurance by $41 a month. Total saved $3,184. Not from getting a raise, from refusing to pay the poverty premium. Here's your playbook. No gurus, no shame. Number 1, build a $500 fee firewall. Not for vacations, not for emergencies, solely to absorb banking shocks. Keep it in a separate account, out of sight, out of mind. Number 2, switch to a truly fee-free bank. No minimum balance, no overdraft fees, no convenience charges. They exist. Hint, look for credit unions or online banks that profit from loans, not your mistakes. Number 3, automate one tiny win, $5 a week into that firewall account. Set it and forget it. Consistency beats intensity every time. Number 4, be deeply suspicious of anything sold as convenience when you're low on cash. That $3.99 instant transfer fee, that's the poverty premium ringing your doorbell with a smile. Money isn't about buying stuff, it's about buying options. And the first option you need is to buy freedom from the $3,000 a year tax on being broke. The real catch isn't that you're bad with money. The catch is that the game charges rent just for playing. Protect your first $500 like it's the floor, not the finish line. Because once you stop paying the poverty premium, that's when you actually start getting ahead.